Good morning and welcome to our Bitcoin demonstration under Market Master Roland Attenborough and under the watchful eye of William Gann, my guide and teacher. He is going to show us exactly how we were able to find these tops in the August area. And we were discussing this in quite a bit of detail in some previous videos, and I wanted to point out that we've been talking about our Bitcoin cluster dates and how I've arrived at these sets for dates, and we're using the natural square. So I am going to take the 0 pointer of our natural square on the circle ring, and I'm going to align it with the red ring. We have a red and a green ring. The green ring goes clockwise and is for bull markets, and this red date ring just inside goes anti-clockwise, so that when the numbers go down in price, we can follow it with the dates. And we utilize all the red lines, which are 45-degree increments, or we're just dividing the circle into 8 equal parts. And if you're a musician, you'll understand that greatly, as there are 7 octaves right here before we have to return to 0. So let's go ahead and let's talk about how we were able to arrive at some of these dates. So Bitcoin made a top on October 5th. So we're going to align the 0 on our marker with October 5th. And looking directly straight across is the top for Bitcoin at 126 on the square. Also note on our circle ring that moving up 3 circles would bring us to 108, and the other side is 126 right here, directly in line. So mathematically, all is balanced. So how do we arrive at these dates here? Well, each one of these dates that we have here listed land on one of these red lines, which indicate a very strong change in trend. And we don't always expect a top or a bottom, but we can expect a change, something to occur. It could be a swing top, we could have a swing low, or we could have a move that adjusts the market valuations to where we think they may end up. So we have essentially done just that. So on the square, we have arrived here at 68. I said that the top of this market should be around 68. And if we got higher than that, the next octave would be about 71 to 72. We'd have to really close strong above this to change and invalidate my bear market structure. It's still intact since October. We are now 10 months from when we called the tops, and we've been sticking to our guns. Let's now take a look at what we were stating. So we stated that with these, so from this October 5th, this 315 degree marker is this line here. It's 315 degrees right here. You can see 310, 320, so 315 lands right here on October 21st. And we've been stating that there would be a change in trend between these points. And I've also taken the November 21st low, that extreme low at 79, and we can then take this and line it up on the 21st, and then each one of these red lines here give us these date sequences, and this is how William Gann was able to find tops and bottoms in the market. So we'll swing this back to October 5th here. You can see that I put this flag here quite a while ago. I had put these, you've seen these white lines of this channel on this chart for many months. I've been doing these things, and I put this orange line on here stating that if we don't get above this 66, 67, and 68, which is right here, If we didn't get above this area here and stay above this, that it would indicate a swing top and a bunch of weakness, and that we could see something around 68. We mentioned that. I'd like to also take you to where we talked about this on our video. Okay, where is it now? Oh, here it is here. Hopefully the square isn't in the way of this recording, but it probably is. Right here I stated that the August rally retest of 68,000, and I made and published that on the 8th of August. Of course, you've been knowing I've been talking about this for quite a while before that. Let's just get back to the chart, and let's go over here and take a look at our PPT module. I wanted to bring this into your attention so that you could understand. So this is our private predictive technology. I've coded 35 modules under William Gann's work from all his books and courses, and we've converted it into this audible explanation which signals converged and which historical angles contributed and how the direction was resolved and how the scenario prices were produced. So it's calling for these year-end major turns here for these scenarios here. Well, let's go take a look at the rest of the yearly structure to see what this program actually was showing us. Here we go. Okay, maybe not. All right, here we go. Sorry, that just took a moment to get this. I got a lot of things running on my laptop right now. So this is our months. This is what the status is. It's actual or a forecast, whether or not it's a major turn or a reversal, the evidence for this happening or not. And this is the low price for the market, and this is the median, and this is the high-end price. Right now we're in August. We were stating that the low price for this program stated 57 with a mean price of 62, which we've been maintaining, and it stated that we would have a topping out pattern of around 68. It doesn't mean we have to stay in 68, just the model is showing us that this is what we could look for. The end of the year is pointing to a 50 or a conservative level within that valuation. And again, sticking around the 62 as a base mid value. And at the end of the year, it's possible we could see something as high as maybe 76, 74. And a break above these areas would indicate that our bear market has subsided and ended, and we're beginning on the new market area. But I wanted to point out that, you know, in this thesis, we are still dead on with the private predictive technology into what we can see for the end of the year. And I wanted to make that really clear and evident to you. So looking at that, we've identified that the private predictive technology is acknowledging that we're in still a bearish scenario. And we'd like to go back to the chart now to update how this is looking. So I'll give it a moment while the chart populates here. So I put this yellow flag here and I put it around the 16th, and I stated that we would be probably making a top somewhere around here. And of course I got a lot of really negative feedback, but I mean, you know, a lot of the people don't study market behavior like I do, and of course it becomes difficult for some people to acknowledge or perceive that, you know, these things can actually occur. So we use the mathematical probabilities and the time cycles to go about this. And you'll note that because our channel is much different than any of the other channels. We do not talk about the news headlines and all the nonsense going on anywhere in the world. We just don't do that. We just simply take the methodologies of William. We apply them mathematically. We use the circle and the square, and we find the areas of exhaustion or completion, in which case this is what William was in fact looking to do. Looking at that, we stated that by the 16th to the 18th, we would see this top. And of course, here is our 200 moving average. We talked about this 200 moving average, and I stated to you that we would probably be seeing this by the late part of August. And of course, our timing date for the 16th to the 18th came just perfectly on time. You know, the change in trend just naturally came perfectly, just as the square has aligned and mentioned to us that we would have. And of course, you guys have seen my scribbled on piece of paper going back since October, stating all these dates. And you know, nobody pays me to show you all this stuff for free, and I'm here to help the little guy. You know, I came from small beginnings, and I just want to show you that it's possible that we can find tops and bottoms, or changes in trend. More importantly, I'd like to reiterate that we're looking for changes in trend. And of course, we've been calling for these tops, and you know that back in May I stated, hey, I think it was May 4th or 5th or something, I did a video about this top that I stated, you know, sell in May and go away, and holy God, did I get a lot of negative impact on that. But the fact of the matter is, we've stuck to our guns, and the market is still in a bear market. We're in a bear market rally right now, and it looks like we're about to top out. If this market does not get above the 66, 68, and particularly above the 200 moving average, then we would have a major failure. We would have to get above this to move back up and get into these high priced areas of this 78. And why is this so particularly an overhead resistance level? Okay, well, let's take a look at it. So I've moved the zero marker here to October 5th, and this represents 36 or 360, 72 or 720, or two circles. All we're doing is taking a circle and just adding it on there. So when we go around from our first circle, our second circle, from 36 to 72, in between this, you will note that Pluto right now is sitting at 67,500, and we've just made it up into this area here. And 69.7 is right here. It's just before the node, and the node is sitting on the degree of Pisces at 0 degrees, and it takes approximately 18.6 years for this to go all the way around. And where was the node way back? Well, just prior to 2007, where we had the 2007, 2008, and 2009, we had that big capitulation in the stock market and whatnot. Wasn't too difficult to figure that one out. I think we're about to have another one. I'm also going to put out our 2027 report, and as you know, the 7th year, according to Gann, is a very fatal year, and I think that we're going to have some very big swings in 2027. So looking at this, I've given you 3 points. I've given you my 200 moving average, which I stated we would get back into. We've used these geometric lines, and these white geometric lines are all exactly the same angle. 25.58, right? 25, okay, so this one says 83. It's just a few degrees higher inside the degree. Okay, so this one says 26. You get the idea though. These are parallel angles, and they're all the same going back to the beginning of the year. And we're just stating that it's very possible and likely that the rollover and the change in trend is about here. And we're looking at a major change. And if this does not get above these 69 and 70 levels, then we will definitely not be moving up to 73, 74, and 79 and 80, which is of course a very high point here in our last rally, which happened in May. Do I think that we can get up to those levels? Well, it's going to take a significant amount of energy to move back up, given the fact that we're in the midterms and we're almost through this bear market cycle. It looks an awful lot like we're about to return down to some low levels. Now, our private predictive technology that we coded was very conservative in that it was stating that we would have an end of the year around a 50 level, okay? So that is very possible and likely in that conservative model. However, we have a few other drawdown models that bring us into the 40 and the 30 level, mid 30s. And I've pointed that out to you as well. So if this maintains a top here at 69 here, then we will be moving down to 40, which would be a 360-degree move, and then 45 degrees, which would be a 405-degree move, would bring us to 36. And we spoke about this several times, and we think that it is possible and likely. However, we would have to crack and get below this 50 level before that happened. Also note these yellow lines here that come down. You maybe can't see that quite as well. I'm just going to make this a little smaller so that we can utilize the attributes. So from here, I've drew these yellow angles down. These are about the same angle, 36 degrees, right? 35, all right, so this one should be about the same, 35 or 36. What's interesting about these? Well, where they draw down and they make a parallel with the last low, we have a swing top or the exhaustion swing for the market. All right, so that's our first model. Our second model caught the May top from this yellow line, paralleling out here. So I took the very same market metric. I mean, we're just taking the very same mathematical angles and we are applying them. So when this bottom parallels with this, it states that there's a top in place, and we are topping out here. All right, so something is going on here. Either this model is changing and we are moving up to retest this, or this model is stating that this topping area, based upon this angle and this bottom, has completed, and this is just a fake out retest, which we've been talking about is possible and likely, and that a rollover is very possible and imminent here. However, we would need to see something get above this 70. We need to see that, but this looks like a shooting star. It looks an awful lot like, you know, this is just reaching up here, and it's not really giving me any confidence that we would be moving higher unless we get above this area and close above it. And you can see that the bulk of this candle has stayed right at our topping of our channel. So this is making me very suspicious for the likelihood that this is a bull trap, and to be very, very careful of it. So for traders, I'm asking you to keep your stops very tight and of course underneath the last low, and if you can, lock in your profits and get ready for a possible change in trend or an acceleration up. And this could extend into the part of September. We've been discussing in our program before that late September is another likely area for a top and a fake out and another major move down. I wanted to share this with you just so that you would get an idea of how we come about at some of these postulations. And if you're interested in acquiring one of these tools and the knowledge for creating these market cycles under William Gann's work, you can hit us up and just email us at DeBoff Enterprises or deboff13@gmail.com, or you can text us at 1250-212-6922, and you can receive one of our natural squares and the work of William Gann, in which case you will be able to utilize these market metrics. Peace and love, brothers and sisters.